Welcome back there in the market. So we saw a bit of a dip, but that's got quickly pulled back, that's got bought into. One stock from the Nifty pack that's suddenly seen a sharp downtick is Cipla. I think it makes sense to pull up the intraday chart out there. That stock suddenly has moved to the low point of the day. And India Pulse Housing Finance, it's had a big run. That as well has come in for some profit booking, as is the case with Bajaj Finserv. Both of them have seen a big rally in the last few days. Both of them come in for some profit booking. So keep an eye out on a couple of those stocks. But let's move on then. Let's get you some market opinion then. Earlier today, we spoke to Mihir Vohra, Director and CIO of Max Life Insurance, on how the earnings season has panned out so far and the sectors that he likes.
We have seen that the September quarter's numbers have not really disappointed. There have been earnings growth numbers as expected because of the low base of last year. But having said that, given the shock that we saw in the NBFC space, we might get disappointed in some of the segments like housing loan growth, overall NBFC loan growth, and the associated sectors which they were lending to, like personal spending, consumer discretionary, autos. Early indications are that the Dussehra season has not gone very well for the auto segment. So to that extent, I think the hopes of a reasonably good recovery in the December quarter probably may be toned down a little. So to that extent, the markets having corrected so much, we are in a zone where we should wait and watch. The time to buy is obviously when nobody else is looking at it, when there is extreme pessimism. I think the next 3 to 4 weeks are very crucial. We would rather wait and watch and see how the situation pans out. But I don't think valuations are an issue at all anymore. It's just a question of who comes out of this with the minimum injuries, so to say. When we saw the currency continuously depreciate and the US economy continue to do well, and of course that call has played out well, probably we may not keep as sharp an overweight as we had, say, a couple of months back. So while we are still positive on the IT and the pharma segments, both of them which were kind of currency plays, we are no longer increasing the overweight. We are probably reducing the overweight mildly and switching to the other themes that or the other pockets of value that have emerged.
Okay, let's get to some numbers that we're expecting later today from the Nifty pack. Tech Mahindra, that's the big one that comes out of the set of numbers. Rima, what do we expect there?
A stable quarter, a dollar revenue growth of 0.3%, a constant currency growth of 1 to 1.2%. The top line growth for Tech Mahindra will be driven by their telecom vertical, which has seen very strong deal wins. We'd spoken to the company in September, and at that time they told us that the telecom vertical has already seen deal wins worth $300 million. So that is going to drive the top line growth for Tech Mahindra. The non-telecom business or enterprise business will actually be flattish on a quarter-on-quarter basis. On the margin front, the company has had a trend of improving margins, and that is expected to continue even this quarter. This quarter, our poll throws margins to come in at 14.3%, aided, of course, by the INR depreciation, operational efficiencies, and that will offset a little bit of the wage hike pressure which kicks in because they will be given wage hikes to the employees within the 0 to 6 years experience bracket, and profit will be up close to about 16%. What will be the key things to track? One will be the deal wins, because deal wins for the company have been in an average of about $300 to $350 million. This quarter, it's expected to be much higher because of the strong deal wins the telecom vertical has seen. So Kotak estimates it to be in excess of $400 million. Is that sustainable? Secondly, on the telecom vertical as well, the company's guidance was that for the full year, the telecom vertical will see a growth of low to mid single digits. So that's about 3 to 5% growth, according to the analysts. Is there an upside risk to that? And are there any early indications that 5G capex is coming through? And secondly, on the enterprise, because there the management commentary has been that it will continue to see growth faster than the industry. Do they hold on to that? And finally, of course, is there more margin upside? So that's going to be about Tech Mahindra. Numbers will be out post-market as at around 3:45. We'll slip into a very short break, and as promised, we'll turn our attention to New Gen Software Technologies, which reported their numbers.